Man, Bill, insurance, extremely complex topic. Dental practice owners talk about it all the time, right? Do I take insurance? Do I not? Key driver in their business, though, man. But great episode there.
You know, it's funny, Jared. We talk about insurance all the time. I don't think we even had a grasp of how complicated it can be and how, if you don't monitor it and manage it in a good way, how quickly it can get away from you.
Yeah, just one of those comments he makes, and you guys will listen to this, but you know, where one decision by a payor or whatever this lease network thing can be made, and you never really know about it, and it can change what you're getting reimbursed for several months or years, and you never saw it.
Yep.
You know, it's just something you don't see. So, not one of these things to DIY it for sure. But you guys are going to really love this conversation with Brian Phillips with 5 Lakes Dental Practice Solutions. You guys enjoy.
Welcome to Dental Momentum, the podcast dedicated to lively discussions on business and financial strategies tailored for dental business owners. At Duckett Ladd, we're committed to transforming your business journey and supporting you at every stage. Join us as we delve into the keys to long-term practice success, from cutting-edge accounting and strategic tax planning to personalized business strategies. Together, let's propel your dental practice forward with unstoppable momentum.
All right, our good buddy Paul Goodman, you know, he says this all the time, right? Something to the effect of, what other business do you own where you set your own fees, you set your own pricing, but yet someone else can come in and say, no, let's go a little lower than this. You know, I was talking to another buddy of mine, and we were using the restaurant analogy. You know, think about it this way. It's like you go out and you establish this restaurant, right? You go out, you rent a space, you get this restaurant, chef's busting his tail, creating this menu, setting the own prices, right? You got to set those prices to make sure the business model works. Opening night, you go out, you get a special on, I don't know, some sort of fancy pasta, $21.99 or whatever for this. And then you go out and then you take them the check and they give you a little coupon, says, no, I think I'll pay 11, right? What other business, Brian, does that work in? Tell me that.
You know what, I'm not sure, but I'll tell you what, I really wish now that I had one, like just to say, because, you know, like quite frankly, it's so true. Like, you know, we're talking like, you know, insurance and PPOs and things like that. And it's the guardrails of revenue one way or another, whether you're in network or not. And, you know, you mentioned, you know, Dr. Goodman and, you know, dental nachos and things like that. And, you know, I know you and I see each other quite a bit, you know, posts and comments and things like that. And I'll tell you the temperature of the market when it comes to PPOs is so crazy. Like, there's not a lot of positive, right? Like when it comes to just the chatter, you know, that you see time and time again that someone's leaving the networks, getting out of you know, leaving all the PPOs, going all fee for service, and they're thriving, right? A lot of times they're doing that. I think there's a little bit of social amplification of that, you know, by and large, though, there are more doctors going into network than are leaving the network, but you got to do what's right for you, you know. And, you know, when you're owning your own business, you know, like this, and someone else is going to control some of your profitability, you know, you do got to really take inventory of what you're going to do to either work with it or work without it. You know, it's pretty important to kind of get your ducks in a row there.
Yeah, so what you guys do at 5 Lakes, so I mean, we're going to talk all things insurance, Brian. I appreciate you jumping on here. What you guys do at 5 Lakes Dental Practice Solutions is just top notch. You guys you're my go-to on all things insurance related, right? You probably see that from how many emails I send you, but let's start off maybe on that fee-for-service route, because you see all the, I'll just say, bitching out there about, you know, screw insurance and all this stuff.
Sure.
Like, what's your advice maybe when you have a dental practice owner coming to you or whatever, and they're like, man, I want to get rid of this insurance. I'm going to go fee for service. All this stuff's going away. This is what I want to do. Like, how do you guys deal with that? How do you guys consult on that?
Yeah. I mean, it's a great question. I appreciate you asking that, because, you know, a lot of times we get approached specifically, can you negotiate? And that's just one tool you have, right? But we do work a lot with fee-for-service offices or like a startup. But a lot of times the goal is like, how do we become less dependent on insurance? Mm-hmm. And, you know, it really starts with, okay, are you really going to be prepared to do what it takes to run a fee-for-service office? Because it is not the same as running a heavy dependent, on insurance, on insurance practice. And what's kind of funny is because there's such a polarizing position on insurance or not, sometimes it clouds what is actually the benefits and some of the deterrents of using insurance. But what I first start off with anytime I'm working with a practice, especially like private practice, is let's take all the chatter out of it. Like, what are your goals? What do you want to do? Where are you in your career? How successful is the practice? What are the factors that are making you think that insurance is something I either got to get rid of, and it happens just as often, we need more of? And you start exploring that, like, as a business process. Like, what is your plan to attract patients, to retain patients, to judge profitability, to set your fees? Like, how do you know all of this information in order to actually make those solid decisions on how your practice runs? Because if you think about it, an average practice, say $1 million or so in top line, you have a number of hygienists on staff, assistants on staff, office managers on staff, not to mention you have bills, to run a business. You really have to make sure that all of those elements, your payroll, your supply costs, your insurance reimbursements, your UCR, you got to really make sure all those levers are in the right position so that you can run the business that you want.
So, Brian, when you look at someone that comes to you in this scenario and they're asking about fee for service, how many times do you find underlying their question is really just a broken system in their PPO structure?
Most of the time, because I get a number of practices that every year that will come to me and say, a year ago, we dropped all payers and went all fee for service. And, they saw a downside, right? Maybe they started losing, like, their attrition, went through the roof, but their new patient acquisition just slowed to a halt. Those are obviously some of the negatives, situations, but ultimately it really comes down to, if you're a fee for service office, you're hustling, right? The insurance, as we kind of jokingly call it a coupon. It's your Costco membership. It's your access. Depending on where you are, financially, where your revenue is, where's your office fees set at, you can start really taking advantage of insurance as opposed to being taken advantage of. So it's something you got to really, keep your eyes and ears on.
Yeah, exactly. Do you see, maybe this is a stupid question, maybe this is what you were just saying though, do you see fee for service offices out there that are then coming and saying, well, maybe I should reintroduce insurance, or maybe they've never offered insurance before, never taken insurance, and they start to add it? Do you see that quite often, or some?
Quite a bit. And, the most savvy of the business owners out there, that, fee for service offices that are running successful practices, been in business a long time, have a great reputation, they are also savvy enough to realize what we should do is take a look. And, we probably go through a few hundred practices every year where they are fee for service, or a lot of times when someone refers themselves as fee for service, sometimes they also include, or we only take Delta. Like, sometimes they just kind of use those back and forth. But when you're a savvy business owner, you kind of want to know what's out there, right? So we will go through with fee for service offices and say, okay, here's what it would look like, right? Maybe a large employer in your market has switched, their benefit plan, and that might be something that could be attractive to you. We see a lot of that where you have, based on demographics, you may have more fee for service offices, right? And other, different areas, different geographies have significant dependence on it. But you really should take a look each year, or maybe every couple of years, to say, what does it look like? Where are those fees? And what is my market share compared to, my peers? We run through that process quite a bit, and I love doing it because it's almost like a check-in. It's like, we go to the doctor, get a checkup, and, sometimes there might be something, you might need to take some, vitamins or something like that. But an office can definitely benefit by knowing. And that's one of the things with us, the analysis that we do. I mean, it's the standard, right? Since we created this industry 16 years ago, it allows you to know if you're doing things right, where improvement is, and at least evaluate it. Because you'd love to have your options out there, but we go through that quite a bit. And I love it when a practice will be like, you know what, appreciate that. I think we're good. We're going to stay right where we are. We're going to stay fee for service. Maybe in a couple of years, we'll come back and look at it again.
So, Brian, this is a dense question, but probably an accountant type question, is presumably, I mean, when you say that the PPO creates the access to the customer, the patient, right? And so we equate that to new patient numbers. So then you look and you say fee for service. Presumably that number will be harder to achieve what you were in the PPO network. So you would hope that the write-offs of the insurance, there's some math there that gets you back to at least an equilibrium or a net positive. So is that what you're saying? Is that kind of the analysis you run when you're trying to explore fee for service to see like what would the effect be on new patient numbers? What would the effect, make sure the rates are good, and how would that play out in the P&L?
Yeah, so when we go through an analysis, what we're looking at is helping the business owner, the practice, create a participation strategy, right? So that might mean we don't participate. It might mean let's leave plans. It might mean we need to join plans. It might mean we need to negotiate and kind of see where that falls. But it also might mean we may need to take advantage of like the lease network situation, which, everyone kind of has heard those terms like umbrella plan, a lease network. But you want to figure out what is the right mix. And in order to do that, we have a very substantial analysis that takes into consideration all of the major business factors that are used by insurance organizations to kind of determine those rates. Things like the demographics, right, in a market, how much market share that payer actually has has a lot to do with it. The type of dentistry that you have, your participation as a dentist, like are you already in network, and what are you doing, how have you adjusted it? They take into consideration UCR, like your professional fees impact the reimbursements as well. But when you start looking at those factors in many others, you start seeing the business plan come to life, right? It's like here's our ideal patient. Here is our ideal level of business, right? How many do we want? 30 new patients a month? Do we want 100? Do we want 7? Compare that to kind of where we have been. So we want to kind of take a look over the past year or so and really see what is it that we need to do. I see practices all the time where they have, like they're on it, right? One thing, if I give any advice on insurance, keep your eyes and ears on it. It changes. It'll change while we're talking about it. But, a lot of practices, what they will do is they will evaluate all of these factors every year. Is my UCR comparable, or set at the level that I want to compete at? Are my reimbursements coming in at a palatable rate? But what are my goals? Number one in all of it is, what are your actual goals? Do you plan on hiring an associate? Do you plan on retiring, right? Do you plan on buying another location? Do you plan on kind of scaling down? We have a lot of different reasons people come to us. Sometimes it's, hey, we're just getting hammered. We can't afford to be in business, and others are like, I'd like to take Fridays off and go golfing. It is a significant difference in everyday conversations. But it starts with your goals and then evaluating all of the major influences that are used to determine, the fee schedules from payers that really affect us.
So something that you said, Brian, I think you equated this maybe to an annual physical, or maybe that went through my mind when you said something. Is this how doctors, dental practice owners need to treat this? I mean, like annually, because of changes, geography, I bet is a big deal here, where they're located and that sort of thing. But should dental practice owners be doing this every single year? And they're doing an analysis almost to then say, okay, what do I need to do from this analysis?
I would answer it like this. You need to start off with, a very comprehensive understanding of how all of these factors influence the way you work in your business, your revenue cycle, how it's impacted. Because there are so many tangential relationships from insurance, right? It impacts everything. And keep in mind, we have their staff, family that all need to be supported based on how effective this business runs. Now, I think a savvy business owner is going to be taking a look at the major influences on their business every year, right? Like, what are the tax changes coming up, right? I have a guy for that, right? Am I outsourcing and insourcing the right amount of business? I have a guy for that, maybe to bill or what have you. Do we need to hire every year? These kind of come into play. What are the goals for this upcoming year? Like right now, what is the 2026 goals, right, for that practice? And if that is hey, we need to add $200,000 in production, or hey, we got to make a decision on bringing on an associate, you should evaluate it. Now, the analysis that I'm kind of referring to, has an impact on all of those areas. Insurance changes so often that most of the time it's very hard for a practice, a group, even DSOs, to keep up with it. And quite frankly, there's a lot of comments made to me that, well, large DSOs have it all on point and they don't, they're in charge of the insurance, and it's not the case. Insurance, these are major, large organizations, right? Top, Forbes, or Fortune 50 type organization, that they still have a lot of control. As a practice owner or small group owner, you really do want to make sure, one, are we in a good strategy? And then two, if I keep my eyes and ears on it, or I partner out, the best way, I can maintain that type situation so that we are adjusting on the fly, so to speak. It's kind of, driving down the road, you see a pothole, you can just swerve, right? Mm-hmm. You're not just like, oh, this year, since, we didn't do anything with the insurance, I got to drive through the pothole. Like that's not the case. You got to really stay on this to make sure that that you're in the best possible position, because you very quickly can watch revenue circle the drain, with minor changes to insurance, and especially insurance partnerships.
Brian, I look back and I think years ago with our very first dental client we worked with, and we were more of a tax firm at that point. I remember him coming into the year, and he brought all his source documents, and he brought me a stack, probably that big, of like these 1099 statements from insurance, and some of them were like $100 or whatever. I mean, it blew my mind. I'm like, what are all these things? And he's like, these are all the insurance we filed claims on this year. And it just made me wonder, something I've heard you say is I think, from our perspective, we always think about dropping insurance as being all or nothing. But my question to you is when you have people come to you, how often do you see that they're participating in, just too many? Not necessarily all of them are bad, but they're just in too many and it's not effective or efficient.
Almost every time. And I'll tell you, there's a number of reasons. You could do emergency dental work where, if you're in Orlando and you have visitors from all over the country all the time, inevitably you're going to have, like emergency work. And you might find yourself, working with, certain insurances. You're like, what? Why? Where did I get Blue Cross of Tennessee when I'm in, Orlando or what have you? Yeah. But, to kind of narrow it down a little bit, yes. And one of the main reasons that happens is because of the lease network relationships. You may find yourself as a business owner, as a provider, that you joined a network, right? You joined Aetna. Let's just make a random example. Mm-hmm. You joined Aetna. Well, Aetna has partnerships. So you may find yourself in network with any of their partners, okay? And this is where, obviously an analysis kind of figures all that out, right? But you can see a situation where, because of your relationship with one payer, you now have a relationship with others. You may file a claim you're expecting to be out of network. It gets paid in network, or creates a delay or even denial. Those things happen all the time. But what we want to really do is focus on the more impactful plans. We'll do what we call rank plans that say, here is the listing by profitability of the payers that you work with. And you'll see like, hey, it's 50% was Delta, 30% was Cigna, 20%. And then you get down into like .001, right? Hey, we have 3 patients, or we have 2, or or we're in, but we haven't seen a patient in 2 years. What we want to do is start cleaning that up too, because one, less is more, oftentimes with payers. So we start making a recommendation that, hey, why don't we just drop those? Because what are you going to do? You're not going to double your business with someone you get you have like 4 different patients with. You kind of can clean all that up, but what are the ones that have the biggest impact, and what can we do with that? And oftentimes, there are payers that may represent 40-50% of your practice that you can negotiate 10-15% with, or more. And it is not unheard of to in an analysis see options you have, so that you can say, these payers don't represent a lot of patients, they don't pay very well, and sometimes it could be a hassle depending on like their processes. However, we can kind of change the way we are contracted with them to take advantage of these lease networks or umbrella plans. And then all of a sudden, a payer that you may have had just kind of like this overall negative opinion of is now positive, because now they pay, at least palatable, or, maybe the processing is done differently. So you see all of these type of things pop in, but in reality, the situation is we want to build a strategy. So, and a strategy doesn't mean you participate in everybody. A strategy might mean very strategically you pick the payers that make the most sense. And if you think about this across like a life cycle, you're an associate, right? So you're kind of dependent on whatever the owner is doing. You start out by buying a practice, right? And you get into certain networks, you build up your business. Then as you start becoming successful, you build a brand. Let's start chipping off some of those payers and that dependency, that comes along with it. And, so all of these things are impacting the way a business is run. And you got to make sure that that you're continuously looking at it to make sure that, hey, do I need to be in insurance? And if the answer to that is yes, what insurances? Once we pick what insurances or what networks we want to be in, then we got to figure out how. What is the best way to get into that network? And that's where the analysis comes in and gives you all of the options that you have.
There is so much to this network thing, or this insurance thing. Yeah. It's unbelievable. I mean, every time I talk to you, Brian, and you start explaining different things, I'm like, oh my gosh, this is so confusing. Is it fair to say, and I think you'll agree with this comment, nothing against dentists, we love dentists, that's who we serve, our dentists, but a lot of them are DIY people, right? Like, I can do that.
Yeah. I'm
sitting here listening, if I'm a dental practice owner, there's no way I'm messing around with like trying to do a lot of this stuff on my own, because let's just say I'm a PPO practice and I'm like, I'm gonna drop a couple insurances. It's almost like, I don't know, gambling a little bit. Like, you need data behind that, like experts like you to do it. I mean, do you see people try to do a lot of this stuff on their own? And if so, do they fall on their face, if you will?
I do see a lot of people who do it or have done it themselves, right? Usually, when I'm talking with someone, I ask that, like, what have you done, over the past? Have you worked with a consultant? Have you done it yourself? Did you do your own credentialing? Did you negotiate? And many times, it's, yes, we have, and we were told no. Yeah, because, in the insurance world, your agent is professionally taught how to tell you no, right? Like, you're good. You don't need any more, no increases for you. But what is happening typically is they're not necessarily negotiating. They're basically asking, can you look at our fees and tell us, will you give us more money? And the answer to that is universally no. But if you build a case, which is what Five Lakes does, with our analysis, we build the case so that you can actually negotiate with that. But, to your question, like, can someone do it themselves? I've talked to a few practices over the years who, had it on point. Traditionally, though, they are maybe like in a very, like, their market is very, it's set up for them well, right? It's like a family business. They've been, they've been the doctor of record for generations, things like that. I do think, though, there's a lot of, I could do it myself situations, but they may not necessarily understand all the tools that are needed. Like, I could give myself a root canal. I probably don't want to do that, right? It won't go well. So why? So why try, right? It's like, there was a day we used to change our own oil, right, in the car, those type of things. I would not recommend it because PPO complexity is, you're in the same world, right? It's the tax code is not something that everyone just understands, right? I don't recommend anyone go it alone. And there are areas where it's almost, like I get off the phone with someone, and I have that opinion, like, how did this call go? And, it's like, they've made a lot of mistakes, and because I get asked inevitably, what can we expect in return, like for a negotiation?
Yep.
And, if I, in that conversation, I sense how things have gone and how long it's been, like, there's probably a lot of opportunity on the table for you. But the thing that makes me cringe the most is when, someone has like that belief that they already know all the stuff. Because, what's the theory that, like, the less you know about something, the more you are like adamant that you do know, right? It's like until you become more and more of an expert, you will, you start admitting that you don't know as much, the more of the expertise you build.
So let's kind of run that DIY thread to credentialing, which you just mentioned, because if I hear something, especially say with groups that are growing, adding associates or adding locations, I hear this thread all the time is, man, I just can never get it. But once we get that credentialing up and going, we're going to be gold on this office, and they're running a cash loss on that office. So walk us through that. Do a lot of people try to DIY that? And, it just seems like from our perspective, a lot of times that process gets really stretched out.
Yeah, I would say an office handling their own credentialing is still very, very prevalent. I do warn people, you have to have a very significant amount of knowledge and understanding of the way the networks and the payers work together, right? The way the lease networks work. And sometimes you run, against people who have been doing it and they're doing it fine, right? Yeah. But the credentialing is an area that I think a lot of the providers assume is easier for the staff to handle, right? It's like, I have a person, they'll credential me. But that's kind of reliant on that person having the most up-to-date information. But I do think where credentialing comes into play, there's a number of issues you got to be aware of. One, if you credential before you negotiate, you might lock yourself out, right? Especially if you're like a startup, right? Hey, I'm opening next week. I'm going to credential. Oh, but I want to negotiate after I credential. Doesn't always work that way. You kind of can lock yourself in. Another situation is you may, if you really have a strategy in place, you might need to do what are called like opt-outs of relationships. So I want to join this network, but I want to opt out of different partnerships that they have because I have other plans. That is tricky. We call it optimizations. That is where inevitably things get messed up. You could have negotiated a good rate, right? Very palatable, very attractive. You accept it, but then when you go to do your contracting, you kind of it became undone because the proper sequence and timing of opting out of different partnerships starts really coming into play. And I've had to have the conversation with practices that, they'll come to me. That's like, hey, we negotiated, but it seems like we never got that fee schedule. I'm like, okay, well, let's take a look. And we start looking. And we say, well, that's because you want payer 1 to raise their rates, but payer 2 is standing in the way because of the way these relationships work. And it's different for every practice. And, 2 doctors in the same practice could be running up against 2 different issues. You have 3 or 4 locations, in a certain market. They could have different fee schedules, and the relationship that they have with the payers can change. There are so many different factors that kind of come into play that you're I don't want to make it, like you're not dealing, you're not playing with fire, but you could be misled on the path that you're taking to achieve the goal.
So, Bill, I think this is what you were alluding to a little bit as well. And Brian, I've asked you this question 9 million times, but I'll ask it here. Because if you've got somebody who's getting ready to buy a new practice, maybe they've got one practice and they're adding number two, or maybe it's just a doctor buying their first practice. When in that process of buying that practice, do you start the credentialing process? Because we see it all the time. I just had a client I emailed you on several months ago, Brian. It's like,
Yep.
they got this practice, it's bought, but they're waiting months or whatever until they can get in network or, credentialed. Like, what's the easiest way to, or is it just not easy? What's the easiest way to go through that process? And what do they need to do to reduce the downtime, if you will, or the time it takes?
Yeah, I would say first and foremost is start early, right? If you know you're going to buy a practice or you're going to do a startup, you really want to start in earnest looking at the insurance 6-8 months ahead of time, right? Now, sometimes you may not have all your ducks in a row yet. You may have an offer that is, pending, but you really want to start understanding it because you need to understand, what does the market look like in terms of rate, right? Like, what are the insurance allowables in a market? What are the payers that are even involved? It's one thing if you're going to open a practice 2 blocks away from your current practice, and you've already looked at it and you have a good strategy. But if you're buying a practice and it's, 20 miles away or, in a slightly different city, everything could, there could be significant differences. So the earlier you start gives you time to evaluate, look at the payers. What's the market share? What are the larger employers and what are the offers of dental benefit to kind of start narrowing it down? What's the competition, right? Because you really want to know your competition in terms of, is everyone taking the plan, right? Or are doctors leaving? Is there a trend in it? Are they leaving network? Are they joining network? Is there any new players in the market? You really want to evaluate that ahead of time. One, it could help you decide if that's really where you want to purchase your practice. A lot of our group business, we work in like the LOI type time frame where like we'll help them evaluate like a viability area, like what fits the market in terms of, or fits their model in terms of what's the demographics, what are the major payers, like what's the proximity to other providers, are there specialists in the market? Like a number of factors really come into play. But once we decide, you really want to get the ball rolling, because if you just go to credentialing, it does not mean because you have another practice that you're getting those rates. It could, and more than likely is going to mean you're going to get the market rate, like whatever the intro rate is. Because if you just file a piece of paper, or electronic now, you file that fee schedule that you get from the payer, if they share it with you, is going to, it's here's what you get type of situation. So we always recommend, let's build a strategy. Let's figure out, well, who are the payers? What's the potential? What's the fee schedule look like? How, where should we set our, UCR at? And then we build a strategy like, okay, we want to join 4 payers. We want to do one umbrella plan. We want to do this lease network, and we don't want to join certain plans. And we build out that strategy. So that takes a little bit of time, to do. What I come up against quite often, literally every day, is that, I'll get a call like, hey, we open in 2 weeks, right? I just bought this practice. It's my first practice. We open in 2 weeks. Sometimes I get it where it's 2 months, but it starts limiting what you can do, right? In terms of like that, like negotiation. A lot of times if it is like, hey, we open in a couple weeks, it's like, I need credential. Okay. Credentialing, and, technically it's called contracting, but credentialing is, like a situation that on average, it could take 60 to 90 days, right? To get approved, right? You file all your paperwork, and then the payer does their validations and all that kind of stuff. You finally get an effective date, but it could take a lot longer depending on how you want to be in the network, where you want to get into an umbrella plan and get picked up under that by certain payers. That takes a little bit longer. So all of these things start impacting it, and you start seeing a practice getting nervous that I'm not going to be in network day one. And, we kind of have to walk them through that. Like, okay, more than likely, you're not going to be in network with everybody day one. However, that would not delay your start, right? You can file out of network benefits and things like that as you're pending, and our team would walk through like how to best handle that, which with what payers. But you do see this situation where there's a belief that credentialing, that process can be done faster than, like, hey, for me, I'm already in network at another location, they'll get me in 2 days. It's not the case. It takes a while, and you have to really build it into your startup plan.
Yeah, excuse me. That makes sense. So let me ask you this, and one thing I can tell you that Jared and I just love is your focus on strategy. So a two-part question here, Brian. The first question is, how many people that come to you actually have an active strategy that they're working on insurance? And the second question is, let's say you work from anybody who's their first practice, they're looking to, say, do a startup even, all the way to big group DSOs, so on and so forth. How does that strategy evolve from that person just getting started to the point where it's somebody who's more of a corporate type structure?
Yeah, I would say, if you asked me that question 6-7 years ago, I would say like 1% have a strategy. You ask me that now, and I say there's a fairly decent amount that come to me and they have a goal, right? They want to at least participate at a certain level, like 40% in network, maybe take Medicaid, maybe take fee for service, what have you. What's becoming more and more important now is understanding that because you have a strategy and you've been working that strategy does not necessarily mean that if you haven't stayed on it, that other factors have influenced that strategy. Where, actually one of the practices that you recommended, what was in a situation where there's a payer that, is a large part of their business. Well, they are now partnering with another PPO, which now is going to affect their reimbursement. You have situations where like a large payer like MetLife or something may partner with a smaller payer that has a lower fee schedule. And all of a sudden that practice is starting to see their EOBs come in paid out less, right, than they were expecting. Now, unless they are tracking that down and really staying on top of it, they may not realize the impact that it has for months and potentially years. So yes, more come with a strategy, or I should say a feeling, a goal, right? Which is helpful. But having a strategy and then being able to keep eyes and ears on it to make sure that it adjusts when it needs adjusted and it needs protected. Because a lot of times what we'll talk about is let's set your strategy and then let's protect it, right? That's what ongoing programs look like. Now, as you evolve, let's say become a group or even a DSO or what have you. There's a DPO, DSO, corporate dentistry, all of it. A lot of the situations that happen, the issues that affect DSOs are significantly different than like private practice. You start getting into like, what should our tax structure be? Like, do we do a tax structure one per state, one per region? Do we break these into little like sub-family groups, or do we put our specialists under one and then have a different tax structure for fee for service? All these things start impacting the practice, and there's a model for everything. A situation you start seeing when it comes to like negotiation is that like for a group, just because you have many offices doesn't necessarily mean that you have more control over insurance. You might be able to have leverage and get a better rate, but you may also get into the situation where now you have to be in network, right? Because if you're a large 1,000 location group, you're in every insurance, right? You're in for the volume. And yeah, you have some say, but you don't necessarily have control where you can say, hey, I want to get this plan, but I want to get it through this umbrella network, and I want this one through a different, that flexibility is more towards the private practice in the small groups, a little less so into the larger organizations. But the revenue cycle really comes into play. The larger you get, the things like your aging, right, really starts coming into play, and the way a payer negotiates is much different. I have large group practices that they want us there to help negotiate the terms of the agreement, not just the rate, right, and the participation percentage of their doctors. So it really gets it gets unique, and each level has its own, pros and cons.
Yeah, so the group DSO space just has a whole different element to it, is what you're saying. Just a lot more strategy, complexity
Oh yeah,
to it.
100%. And you know, sometimes you have a DSO, and we'll just use that as like the universal term for a larger group, right? Like the DSO has, if they have 100 offices, but they're in 18 states, there's not a lot. There may not be much more leverage than if you're a 3 office group all in one city, right? So you start looking for, if you're looking for rate and negotiation or having leverage, the more saturation that you have in a market really, is that's the big driving factor. So you start seeing, probably like in like 2019, 2020, you had this situation where groups were just like scorched earth, buying everybody, right? And a lot of those groups, have changed over time. Some of them aren't even around anymore. But you see this evolution now, 5, 6 years later, where there's like this contraction. Like we really got to get a revenue cycle together, and we got to talk about what's our tax structure going to look like, and what is our our model going to turn into, because the more doctors you have, the more small business owners you have that all have opinions, getting them all on board is can be challenging. And like we work with a number of groups where it's a mixture of specialists in network, out of network, almost ready to retire, have equity, some don't. And trying to wrangle the doctors gets to be quite a bit. That's a heavy lift for a revenue cycle department.
Well, if you guys have made it this far, you can tell that Brian knows all things insurance. I mean, the complexity of this insurance world is just nuts. So Brian, I'm going to throw it to you and I'll just ask a basic question. Like, at Five Lakes, what do you guys do in order to help dental practice owners?
Okay. I think the number one thing that Five Lakes offers, right, is it's peace of mind, right? That that if you're in our program or have been through our program, that you have been presented with a 360-degree view of your insurance dependency, right? And an understanding, a review, and recommendations on how to participate in insurance, whether that is more or less. And what we do, we created our business 16 years ago, literally, like on a table type, kitchen table type situation. And over that 16 years, we really focused on doing the heavy lifting, right? Carrying the burden, not being like we are a full service model. We're not a self-serve model. We don't offer like the cookie cutter approach, which that works for some, doesn't work for us. What we want to do is say, this practice is a good business, and we can help effort the financial goals of this business owner as it's impacted through insurance and in the revenue cycle. So we take into consideration all of those factors, do the gold standard analysis in this world where we evaluate all of the major influences that affect insurance, and give our recommendations, show the impact, the options, and the pathway to get there, for our clients. Then as we get the marching orders after an analysis, like we determine what's the goals or where we're going to go, then we do the negotiation, and then we partner with our clients, to effort these, the results that they're looking for. And then we manage the program in a go forward situation. And we call it PPO management, right? Because it's a situation that changes so much. And, when you are a private practice, small group, what have you, one decision by a payor, by a PPO, can impact your revenue so significantly that you really do need someone, on it, right? We always talk about like that board of advisors, right? If you're a practice, right, you need your attorney, you need your CPA, you do need your PPO, consultant as well. And the way Five Lakes works, is we have highly trained account managers who, whether you're a specialist or you're a startup or an acquisition or a large group, we direct you to the most appropriate person on our team who has the significant amount of knowledge we work with thousands. Like we've done this about 30,000 times, thousands of practices in every state, every specialty, every size. It really, that knowledge is really what drives our, our practices forward.
Yeah, that's gold. I mean, 30,000 times. This isn't your first rodeo. So, Brian, how can viewers reach out to you and get a hold of you guys?
Yeah, so I mean, one of the best, visit us online, right? It's www.fivelakespro.com. If you want to schedule a time, there's a contact or schedule here button. You could also email. Probably the best, just because it's shorter, is sales@fivelakespro.com. Don't forget the pro. That goes right to me, right? So, what I always recommend is like reach out. As our good friend Dr. Goodman says, do the demo, so to speak. Reach out. Let's have a conversation. Let's talk about see if we're a good fit. There's a lot of consulting that just comes in the conversation. We don't charge for an evaluation of just our, here's where you are. We put together a proposal based on who you are and what you need, and go from there. But reach out. fivelakespro.com, and sales@fivelakespro.
Insurance is just a huge part of dental practice owners' business, and the word you probably said this word 6 or 7 times throughout this interview, and it's change. It's insurance. It's constantly changing. You have to have somebody that's working on your behalf to monitor that change, to show you what the impact's going to be before you just feel that impact. So, Brian, I appreciate you coming on, man. You're all things insurance. I love it. I love how much you help our firm with our clients, and definitely enjoyed it, man.
Absolutely. Appreciate it, guys.